So how do you free up this capital to fight a prolonged trade war with the United States? And it's hard to see where the money's actually going to come from.
China has announced a stimulus package thought to be worth over $1 trillion. So why are investors disappointed? Well, DW China analyst Clifford Coonan joins us from our Taipei bureau to talk to us about this. Clifford, it's good to see you. Can you tell us what form this $1.4 trillion boost is taking?
Well, basically, this plan is a form of debt relief for local governments. A lot of the growth in China in recent years has been from the sale of properties, and local governments have sold land around the cities and in the countryside to property developers. Since the collapse of the property market, that funding isn't available, and they've run up debt, and they're paying a lot of interest on that debt. As well as that, you've also seen these local governments investing heavily in infrastructure, and they've been taking out all kinds of loans. So they're struggling with interest payments on all of these projects. This new plan hopes to help relieve some of that and allow them to start building up their reserves again and get themselves out of the current crisis that they're in.
OK, so local authorities have been given a green light to create new bonds, to consolidate their debts in order to bring the costs of servicing those debts down, but no stimulus measures that would directly boost domestic demand. So what's been the reaction to that?
I think everyone in the markets and people generally watching China feel it's a bit of a damp squib, that they should have had, they were hoping for more than this. We had a previous round of stimulus that was basically where they're just lending money to state-owned organizations, state-owned firms to buy stocks, which wasn't really seen as a sustainable long-term solution. Now you're seeing this debt relief plan, which is coming at a time of falling tax revenues, of ongoing crisis in the property market, and all of these things that are combining to make things very difficult for the domestic demand and for consumption in China. So I think the overall reaction is one of disappointment. They're looking ahead for maybe something more will come before the arrival of Donald Trump next year. But until then, they're basically the markets weren't impressed.
Now, I want to bring up a name that you'll definitely recognise, maybe you haven't heard of in a while, but Robert Lighthizer. Now, he led the US trade war against China during the last Trump presidency, and now we know Trump has been elected. It looks like Lighthizer is going to return to run trade in the new administration. What does that tell you about how Trump plans to deal with China come January?
Well, I think that he's basically, it's the return of Lighthizer, the sequel. He's basically he's already indicated that he's going to be looking at pretty much doing what he did before. He said that people are talking about free trade. He said, but there hasn't been free trade for decades. He said that China has been able to take advantage of various subsidies, various low production costs, and all these kind of things pretty much at the expense of American workers. This is the same message that he had in the last Trump administration. So with that, that's basically, we can expect more of the same from Lighthizer, and just to see whether it'll be taken further, whether they really crank up these tariffs now, or whether they'll try and to maybe do it in a moderate way, so that they don't damage relations with China too much. But my feeling would be that it's going to be more of the same.
Now, some were saying that China may launch a big stimulus campaign in order to get ahead of any potential Trump tariffs. That's not happened. They're holding their powder dry for the moment on that. How are we expecting China will react if Trump doubles down on his China rhetoric or even policy?
Well, it's interesting because they don't have that much material to deal with it. I mean, how do you provide a stimulus if you've got all this debt? Where is the money going to come from? Tax revenues are not doing very particularly well in China at the moment. As we've been talking about, there's no domestic demand to stimulate the economy on that side. So how do you free up this capital to fight a trade war, a prolonged trade war with or trade conflict with the United States? And it's hard to see where the money's actually going to come from.
OK, another name that you'll recognise, Elon Musk. He looks set to play a big role in Trump's government. He's been very close to Trump throughout the election campaign, and he has significant business in China. What influence do you think he's going to have over the approach to China?
Well, he's going to be like a middleman, I presume, of sorts. I mean, he has Tesla is very big in China, and it's a very important market for him there. And at the same time, he's coming out very much on the tariff side when it comes to Trump. So he's going to be caught in the middle. I imagine what he's going to do, and we may even see this from the Trump administration generally, is that they're going to try and almost play both sides and do everything on a case-by-case basis. I mean, the last administration was chaos when it came to how it dealt with China on trade and the economy. And I think we're going to see more of that chaos. And some of it works and some of it doesn't. And when it doesn't work, they just move on. And as we know from Elon Musk, that's kind of his style when it comes to a lot of things. So I think in some ways he's going to be very important when it comes to dealing with China, and he has influence in China too. At the same time, it's going to be a question of how much he can risk that influence and how much he can risk his holdings in China if he plays too close to the Trump side. So it's going to be very interesting to watch what role Elon Musk plays.
Okay, and speaking of foreign companies in China, so a Chinese government gauge to measure foreign direct investment in China was down almost $13 billion for the first 9 months of the year. Why are foreign firms leaving China?
I think this is all connected. I think the growth isn't there anymore. The returns, it was always a risk and reward story, China. You had a lot of risk, but you had these huge returns. If you're not getting the returns, there's no real value in having these risky investments, because it is still a risky environment in many ways to invest, because nobody knows where it's going in geopolitical terms. You have growing tensions with the US, as we've been discussing. You have all of these areas which are making China too risky for the kind of returns that are available. And we saw during the pandemic how supply chains were very badly affected by the shutdown in China. And people have been diversifying out of China now. There's a lot more interest in India. India seems to be benefiting quite strongly from this, certainly a different Western focus. But also ASEAN states like Malaysia and Indonesia are all benefiting from the move away from China. So I think that's where the Western firms are now looking. They don't want to get caught in China if China invades Taiwan or something. They don't want to be suddenly left hanging. Or if there's another pandemic, they don't want their supply chains to be destroyed again. So it's becoming, it's not the attractive destination that it used to be.
So one of its main strategies is going to have to be to boost domestic demand. Now, you mentioned Singles Day in China, so that's the annual shopping festival when people are encouraged to spend on e-commerce platforms. I want to come back to that just for a second. There's been lackluster consumer demand. What are the chances of things turning around?
It's a tough one. I think particularly when you have so much pressure, external pressure. China needs to keep its exports. It's so focused on exports. It needs to keep those going, which means it needs the relations with the US to be on track. And then at the same time, trying to boost domestic demand is a real challenge, because you need to free up people's income, and people also need to feel that they can spend their income. People are becoming very spending averse in China. I mean, we've always had a very high savings rate, but now they're not getting the return on those savings, particularly if your savings were tied up in property, because the returns on property are so low. So in many ways, it's like a perfect storm for the Chinese economy. There's so many things, so many headwinds that it's facing, that it's going to be a real struggle to see how it's going to turn it around without introducing something dramatic, without like really freeing up capital controls, really truly becoming a much more international player economically, rather than, China's going to need to open up again. It's going to need to reform. It's going to just have to make it easier, make it a better, more interesting place to invest, and also help boost consumer sentiment so that people will actually get out and they'll start going to restaurants, they'll start spending money again, they'll start buying e-vehicles again. All of these things that really need to increase exponentially to help the economy increase.
All right. Well, it seems a lot of attention has been focused on the US right now, but it would be a mistake to take our eyes off China. Thank you very much, Clifford Coonan in our Taipei Bureau, for talking to us about that.